What's going on, guys? How do you read OSV? One of the common questions I get. Before I show you what all this means, let me just kind of show you the auto tracker. This is an auto tracking feature on the interface. You click on this little box right here. This will automatically record this data right here. Every 2 minutes, it will take a snapshot and bring it down here. And it'll put them in a chronological order, right? So you've got 12. The market is closed right now, but this is the timestamp you want to look at. So it's recording, putting new data to the right, and the old data will be back here. So when you read this, you're going to read it from left to right. Okay. I pulled this data and put it into Excel spreadsheet so it can be so I can kind of break it down a little easier. Now, this data I have in front of you, this is from the 28th. This is when SPY took off and created a new all-time high. But I only recorded 6:45 until 9:30. I didn't get to record the whole thing. I had to refresh my browser. But I'm glad I got to record all-time high. This is the price action of that day. This was on the 28th. You had a nice consolidation right here and then a run up, right? And so I stopped recording at 9:30, which is here. Let me draw it. Let me draw that. So 9:30 ended right around here, and I started recording it at 6:45. This is off, but 6:45 is right here. This is where the market just opened. So basically, I have this. What we have here is a nice consolidation, right? Nice consolidation. The biggest problem people are having is, what is it going to do after it consolidates? What should I be loading up on? Should I be loading up on calls or puts, right? But imagine this part is gone. You don't know if it's going to take off or not. But during this time, you're trying to figure out what to do, right? You have very limited capital, so you can only make one or two or limited moves. This is how I use OSV to help me determine that. So from 6:45 until maybe like like say 7:30, right? I have minus 21.28. So minus 21.28, and the negative values, these negative values represent puts, right? And the positive value, they represent calls. If it's above zero, meaning a positive number, that's put. That's calls, meaning calls are stronger. If it's below zero, meaning a negative number, that means puts are stronger. So when the market opened 6:45 for me, I'm in the West Coast. All right, and we're just going to focus on the tank value. We'll talk about this later. So when the market opened, you can already see where it's going, right? You've got a, an increasing number to the positive. So this is heading towards a positive value, right? I have a rule. I have a rule that if it reaches 10 points, negative 10 points or positive 10 points, to me that's a buy for call or a put. And in this case, if I start at minus 21, 28, and I'm thinking, okay, if it goes negative 30, moves gradually this way, showing negative all the way up to negative 30, meaning it's negative 21, negative 22, negative 23, negative 24, all the way up to negative 30. That means that the put strength is getting stronger, but this is showing the put strength getting weaker, meaning it's negative 21, negative 19, it's going down, right? I would give myself like 10 points. I'll say negative 21. If it reaches negative 10, that would be my indicator that I should be focusing on buying a call for today, right? I'm not going to buy on the spot, but I'm going to just tell myself, okay, it's going to be bullish today. It's going to end bullish today, right? And so it'll be so if we were to go 2 minutes, right? It's recording that, and it's heading towards a positive value, and right around here is where it hit my number, which is a 10, right? Minus 10 from 21 to here. Um, I'll then start to look at the chart and tell myself, okay, I need to start establishing position with calls, okay? And if we look at the charts right here, so 6:45 until what 7:16, okay? I already know what the price is going to do for the rest of the day. So right here, this is what's being recorded, or what I just showed you guys. 7:15 here. So as the price is moving now, keep in mind I don't know what's going on here. As a matter of fact, let me cover it. Let's just cover that. So I don't know what's going on past this chart, but I do know that today is going to be bullish. So I'll as the price is moving, I'll buy a call right there, establish a position, call. I'll buy a call there too. As the price is dipping, right? And then I'll buy maybe I'll buy one or two, and that's it, and I'll sit on it, right? Now it's 9 o'clock at this point. I've already established my position. I just got to sit and wait. And as the time passes by, and let's go back to the so 9 o'clock. Let's go to so right around here. I've already established my position, right? Maybe around 7:30 ish. But look, it's we continue to go down. The price is moving towards a positive value up until it reaches here. Now we are actually at a positive value. Positive value. 6:45. So I'm already green at this point, right? Why am I green? Because look at the price. It's 623, and I bought my call position at around like 523.14, 523.16. At this range. So I'm already green, and I bought way before anybody else does. I knew with confidence that day that that I was going to be a call for the rest of the day, and I did that without reading the charts. Like the chart didn't tell me what it was going to do for the rest of the day, but it did tell me. I mean, the OSV did tell me what it's going to do for the rest of the day. Now it's not always going to be like that. There will be days where it'll trade sideways for more than a day, maybe even two. But you just have to make sure you get the right expiration date and the right strike price to accommodate for the theta. So right here, I stopped recording at 9:30. My computer crashed, I believe, at that time, but 9:30. So I'm green at this point. Look at the price at the top right here, right? 523, and look what happened. It's just increasing. So before anybody else knew, right? Before the market knew, I already knew that today was going to be, or this day was going to be bullish, and so I established position early on. And look what happened, right? Look at the chart, right? Boom. Created a new all-time high at 524.61, and let's look at the all-time high. This is the 524. Where did it go? There. 524.61. So, right, so let's go, let's start from here. And as the price moves, I'm already established in a position that is green, and I'm just waiting to exit. Now I bought, I think at that time I bought an expiration date that I could afford to hold for maybe 5 days. But I secured profit that day and secured profit. Yeah, secured profit that day and a little bit of profit the following day. But that's how you read OSV. I'll show more examples to get granular with these data, but it's a lot easier. I use OSV to enter position. I use OSV to exit position. If I see my call position is not moving anywhere, but then I look at the tank value and realize that the tank value is decreasing, I'll exit. You know, I'll mitigate my loss and not have to suffer even more losses. Whereas charts, the charts don't really show you much. The charts are there to just kind of scare you and entice you, but you don't really know if the day's going to be bullish or bearish. So you're in control, or you're under the psychological control of the charts. And that's what the OSV option strength viewer pulls you away from the charts and allows you to focus more on the data presented in front of you, so that you can have a better, clearer mind when making a decision.